Hello all, this is David Rodriguez, quantitative strategist for dailyfx.com, here to talk about the US dollar and broader FX market outlook in the days and week ahead. Well, let's go right into the charts. Last week, almost exactly at this time, I said that the Dow Jones Same Dollar Index, or the dollar itself, was likely to hold significant lows. Unfortunately, that didn't come to bear, and indeed, the index broke resoundingly lower as the greenback broke against the Japanese yen, tested fairly significant lows versus the euro, the sterling, and the Australian dollar. So the key question is obvious. Is it likely to continue lower, or can we see the dollar bounce back at these levels? Well, I'm paying specific attention to the fact that we're trading near the lowest since a major reaction low back in Q4 of last year. And until we see a resounding break lower, I just see it as relatively unlikely that we see significantly higher euro highs, significantly higher sterling dollar highs, and the dollar against the Japanese yen looks at risk. But at the same time, I come back to this, something we've been talking about a lot, and the fact is simple. If you look at FX options markets, so what traders are paying and receiving for bets and hedges against volatility, or in plain English, how much do traders expect currencies are going to move? You see that FX volatility prices are near their post-financial crisis lows. That just gives relatively little scope for major market moves in the week ahead. And indeed, kind of just looking to not necessarily chase the dollar lower here. I mean, it's possible it works, but the odds, in my opinion, are against it, given the fact that very few people expect big moves. Economic calendars are relatively empty. There's not much in the way of potential catalysts, or at least foreseeable catalysts, for those kind of FX market moves. So it comes down to the fact, what kind of strategies are we looking at in the week ahead? Every week I go through all the major currency pairs which we cover and say, all right, based on where volatility is, based on where trends are, what do I think is the best strategy for the euro dollar, sterling dollar, dollar Swiss franc, and so on. And the fact is, a lot of it just looks like currencies are going to stick to ranges. And the wild card for me right now is what's going on in equities. Last week I made a big deal about the fact that the Japanese Nikkei 225 was falling sharply lower, testing major lows. That put a lot of downside pressure on the dollar-yen exchange rate in particular, and yet the Nikkei set its worst single-week decline in several years. But we've started off Sunday into Monday with a fairly noteworthy gain in the Nikkei. S&P 500 futures and S&P 500 cash prices are rallying into the open, just not giving us the scope for that major breakdown. So in the meantime, I'm not chasing the dollar lower here. I'm looking for short-term trend trades via our Momentum 2 trading system, but we're not going to get carried away. It seems like a good time to reduce leverage. Continue with leverage low, because that's a lot of what we've been talking about, just given the fact that market conditions are not necessarily conducive to the strategies which we trade most often. So that's what we're watching for the week ahead. Best of luck trading, and I'll talk to you soon.